Hey everyone, what's going on? In this video, we're talking about something that's a little bit different. We're going to be talking about commercial real estate and investment real estate. Now, if you've been watching the channel for a while, you might know that I'm a real estate investor myself. I'm a landlord. I've got numerous properties. I've fixed and flipped a couple of homes, and I'm also very interested in the commercial real estate space as well. I've done a little bit of business there, but I'm always keeping an eye out for what's happening with that. So this article just came out and I thought it was very interesting and I wanted to share it with everybody. Is a commercial real estate crisis looming? Analysts warn of price crash worse than in the great financial crisis. So let's jump in here. There's a growing chorus of investors and economists, along with Elon Musk, who are warning of a looming crisis in the commercial real estate market. Analysts with Morgan Stanley recently joined the chorus sounding alarms for the commercial real estate sector, which began facing challenges more than 2 years ago when the COVID-19 pandemic spurred a sudden shift to remote work and turned downtown offices into ghost towns. The sector could be the next in trouble amid banking turmoil, which led to the collapse of Silicon Valley Bank and Signature Bank last month. Commercial real estate, already facing headwinds from a shift to hybrid/remote work, has to refinance more than half its mortgage debt in the next 2 years. Chalet wrote, Morgan Stanley strategists are noting the commercial real estate sector faces a huge hurdle. More than 50% of the $2.9 trillion in commercial mortgages will need to be renegotiated in the next 24 months when new lending rates are likely to be up by 350 to 450 basis points. Basically 100 basis points is going to be equal to 1%, right? So they're saying rates are going to be up 3.5 to 4.5 percentage points. Chalet also noted commercial real estate has primacy on the balance sheets of the regional banks, which in the past cycle accounted for 70 to 80% of all new loan originations. So specifically, I do have to jump in here and mention that when they're talking about commercial real estate, especially in this article, they're specifically talking about office for the most part, right? There's numerous different sectors of commercial real estate. You have multifamily, which is going to be considered apartments, condo buildings, potentially even townhome communities. You're going to have industrial, which is going to be like warehouses and shipping centers. You're going to have retail, which is going to be like your shop, where you're going to have a barber shop. You might have a nail salon, stuff like that. And then you're also going to have such industries or niches like restaurant or potentially even things like self-storage, right? That don't kind of really fall into any of that, but they are still technically in that commercial real estate space. Generally speaking, when it comes to commercial real estate, you're going to have agents who work in one particular industry. You're going to have agents who only do industrial stuff. You're going to have agents who only do office or only do multifamily or only do retail. So that's one important thing I have to note as we kind of go through this article here. Morgan Stanley analysts are forecasting a peak to trough commercial real estate price decline of as much as 40%, worse than in the great financial crisis. Prices have gone up so substantially because interest rates were at such low rates that now the prices are way elevated and they're just way too high, unfortunately. They're actually at a point where the cap rates, what you're going to be making on the home from a net income basis, is actually lower than what the interest rate is. So even if you were just to go out there and only pay the interest on the loan, you would still be losing money every single month with the way that the prices are at the moment. So that's something you really have to kind of watch for, and it's really just something that's not sustainable, and that's why they're saying that prices are going to come down substantially in the next couple of years. I should also mention this is why it's incredibly important not to get over leveraged when it comes to buying commercial real estate or even just investing as a landlord. If you're buying a home for yourself or you're just buying your very first property, you want to make sure not to over leverage on that property, because if you have to refinance and rates go up or something goes wrong, you can get in a very tight position where the rents on the property might not actually be able to cover the payment that you have on the property. Distress of this type has historically not only hurt the landlords and the bankers who lend to them, but also the interconnected business communities, private capital funders, and owners of any underlying securitized debt. The tech and consumer discretionary sectors will not be immune. Morgan Stanley analysts fear stresses in other asset classes like commercial real estate will become another headwind for mega cap stocks alongside those posed by profits recession and or economic recession. Venture capital and private equity could also face hurdles. Venture capital faces markdowns, a cash crunch, and a challenging funding environment. In private equity, recent vintage funds are susceptible to markdowns and a slowdown in raising new funds. Consider rebalancing portfolios with an eye toward markdowns on illiquid investments. So they're getting into the really nitty-gritty here. While many stock investors have declared the bear market is over, those calls ignore the realities that corporate earnings are vulnerable and turmoil in the regional banking could tighten loan standards. That could in turn trickle down and reverberate across business communities and the economy. So they're basically saying there's a lot of businesses out there who could have struggling earnings reports come out, and then they're going to start laying people off. They might not need as much much office space, and then therefore they're going to then get rid of that office space, and that landlord loses that tenant who could be potentially renting, 100,000 square feet of space, which is a lot of space. Not many businesses out there actually need that much space. So if you just take this article at face value, you might be thinking, okay, great, commercial real estate is going to be crashing. You're going to see cap rates start to climb. You're going to start to see them at 6%, 7%, 8%, maybe even 9 or 10%. But you also have to keep in mind what's actually happening in the real estate market and what's happening in each industry. I've actually been paying close attention to this due to another business venture that I'm involved in. I've been watching retail and restaurant space very, very closely. And if anything comes up, especially if it's in a good location, that is going to rent for top dollar almost right away. Sometimes those properties don't even hit the market and they trade hands. So those things, those property types are at an all-time high still. You've also got multifamily, which is going to be considered like apartment buildings. That is actually trading at all-time lows as far as the capitalization rates. That means that prices are hitting all-time highs and the numbers really just do not make sense. There's so many investors who are looking to purchase this type of property that prices have gotten pushed so high. The investors and the landlords who own these properties know that they're sitting on a gold mine and will not sell that property unless it's for top dollar. So this is very concerning. Those multifamily homes, properties are still selling for top dollar. If we jump over to the industrial sector, it's very much the same thing, especially here in Salt Lake City. We are seeing so much industrial, and a lot of those industrial complexes are filling up with tenants before they're even being completed. There's so much demand for them. Rents are all-time highs, and there's still a ton of demand. So yes, I do think that office space is probably in jeopardy. There's so many people working from home, and office space is just not as desirable as it used to be. But these other sectors, multifamily, industrial, and retail and restaurant space, are still trading at all-time highs, and there's still a ton of demand for those particular properties. So I hope you enjoyed this video. If you're looking at buying or selling real estate, whether you're looking for a place for yourself or to invest in real estate, I would love to be your resource of choice. Reach out to me, call, text, or email anytime. My name is Cody Steck. My information's here on the screen, and I absolutely love hearing from you guys. So with that said, before you go, make sure to subscribe to the channel, click that button down below, share this video with a friend or a family member, and don't forget to check out the newsletter in the description box down below. With that said, thanks for watching, guys. Catch you in the next one.